Good afternoon. This is Brad Dennis with BIS Commodities with your weekly update on grain and financial markets. This would be the week ending March 8th and a big Friday for everybody in both the financials and the ag departments. First of all, we'll start off with the cattle market. Very strange trade this week as we continue to see boxes continue to go up in price. We were at 97 plus this morning on choice boxes, and the spread between the two, choice and select, was around 250. So we're continuing to see those boxes go up in price, yet our futures were down 77 cents at the end of the day. So we're not seeing quite the movement that we need to see with the higher box count. Now, you look at the boxes for cattle or for the beef, and we're starting to see those go up, whereas pork or hog boxes are down at their lower levels. So the hog is featured at the meat counter right now, and they're stealing the business from the beef guy. So right now, it's very tough to get a lot of demand for the cattle. Earlier this week, we saw new lows made in the Aprils. At that time, guys were able to sell cattle in the cash market at 128, buy back their hedges underneath that, so for a positive basis, and a lot of that happened. So there was some pretty good movement earlier in the week, and towards the end of the week, we don't really expect too much this afternoon. Moving on into the financials. Today was unemployment day, so the government gave us unemployment figures. Unemployment rate was down from 7.9% down to 7.7%. And we saw non-farm payrolls go up 236,000. Now, most estimates had it going up about 165,000. So, a positive number on the Dow, or for the Dow and S&P, and we saw them rally about $7-8 going into the close here. What you have to think about, though, is those were very strong numbers. And what did we see happen? All right, we saw the stock markets rally. We also saw the dollar rally. So are these strong enough numbers that they cause Fed policy to adjust and say, hey, that asset buying that we're doing right now needs to be brought back some? And in that case, down the road, higher interest rates which would support the dollar. So just something out there. And it kind of seems to me that you'd actually have had a better rally if you would have had worse numbers, because that would have cemented the fact that the Fed has to live with this easy money policy for a long time. So good numbers out of this unemployment result or unemployment report show gains, continued gains in the stock market, where bad numbers could actually signal some acceleration up there. Like I said, 236,000 in non-farm payrolls this morning. 246,000 of that was private companies. So definitely a positive there. But just not seeing the acceleration to the upside. And then going back to the stimulus, it's interesting. You look at what the Fed is doing right now by pumping in $85 billion a month into the economy. Well, you take that $85 billion, and then you also realize that they're issuing treasuries out there to the tune of about $75 billion. So when they're pumping the money in, or the dollars in, the dollars are taken out to buy treasuries, so that leaves you with $10 billion in stimulus, whereas you've got around $15 billion down withdrawal because of new taxes in January, and then another $6 or $7 billion that has come off because of other sequester issues. So, you know, you're still drawing down the economy. So the economic growth going forward here, I think, is going to be stagnant. I think you're going to see those first quarter numbers not come in as well as expected, and maybe that's the time frame when you you see a little correction in this stock market. Remember the old adage, sell in May and walk away. So we'll see if that happens. We've got a long time to go before that. The other big report today was the USDA's monthly S&D report. And with that report, we saw corn stocks stay the same, as well as soybean stocks stay the same, with wheat stocks go up about 25 million bushels. So where was the surprise? Well, more so in the corn than anything else, because everyone was leaning to the negative side or the short side with corn. They figured there would be an increase in stocks. There wasn't. What the government did is they came in and they said, hey, we're going to go ahead and we're going to increase feed demand by 100 million bushels, and that's going to be offset by decreasing exports by 75 million bushels, which is both very logical and was well accepted by the traders as a realistic measure to take. And then they came in and they said, hey, we're going to raise up imports 25 million. So kind of an interesting facet there, that we are using a lot of corn for feed. That's what they're telling us. They're telling us we were bringing in corn too. So down the road, and what I'm looking at is the quarterly stocks report at the end of the month, you're going to have a lot of traders playing this, saying, hey, if they're raising up that feed number, they're saying we're going to be importing this X amount of corn, our quarterly stocks have to be pretty low. So today you did see that trade out in the spreads, old crop, new crop on the corn, and I would suspect you're going to see that continue. Now down the road there'll probably be a time when those spreads relax a little bit, but we're so early in the season right now. There's still the logistical issues down in South America just to get beans out, let alone even talk about any kind of corn, that you're going to see those spreads stay firm for now. Over in the beans, we were looking for a 120 carryout, came in at 125, and they did absolutely nothing with the bean balance sheet. What we are looking at is continued logistical issues down in South America. Brazil, I believe, is about 50, 60 days out in delivering their beans. If anyone needs beans in a short amount of time, they're going to the U.S., specifically the PNW, to buy beans out of there to go over to China. Basis is still firm out there, so we would expect to see the old crop, new crop spreads continue to firm, and that's what we did see today. May Nov and July Nov still stayed pretty firm today, and we're getting to that point where if we can get that close over $15 on the maize, maybe you start to see the technical trading come in here, and we see a little bit of acceleration. Sounds like we do have some formations on the May charts that are showing some bullish patterns right now as well. Instead of that, get up to $15 and then come right back off, as we did the past 2 months. And then over in the wheat, the changes on their balance sheet basically was, we're going to increase our ending stocks 25 million bushels because we're not exporting as much. And the trade was looking for that. The thing about wheat, though, is your May wheat is trading at about $6.97, with May corn now at $7.03, $7.04 area. So with wheat being below corn right now, it is finding itself into the rations. We're hearing of an Indiana ethanol plant which is starting to blend some wheat into their corn mixture to produce ethanol. I'm not sure how all that works, but that's what we're hearing, and we're hearing to 10%. They can use up to 10% of the wheat in there, so it is a viable strategy. You've got corn with a positive basis, anywhere from 30 to 40 cents over, whereas wheat has a negative basis. It's a no-brainer on that one that you could probably procure a little bit of wheat at a cheaper price. But as far as that spread is concerned, like I said, they're getting into the feed rations. They're finding its way into the into the ethanol plant. So that also might be a little bit of a surprise, and it might not make it on the March quarterly stocks report, but possibly the June quarterly stocks report, where we see that all of a sudden that wheat has disappeared somewhat. So to end the week, corn started the day down 14 cents, and I think we were up 12, so we're down 2 cents on the week. Beans were down about 34 cents to start out the day, and we ended up down 2 cents. So positive week for beans, neutral for corn. On the wheat side of things, still a little bit on the downside. You still have the fund showing a short position in the wheat, and there has to be something that causes him to cover that before we see a bounce, and maybe it is with this corn finally getting some basing under it and starting to take some legs to the upside. But that is where we are at for the week of March 8th. And this is Brad Dennis saying have a good weekend, and we'll talk to you next week.